a statistical strategy in your active trading life, friends in the market, they come and go, Errol. Like, and you don't get bent out of shape out of it, right? Like 2 years ago, gold and silver were popping off and we were trading those like mad. And then they got kind of quiet. And it's like, all right, we'll pick up that relationship when it comes back up. Crude oil, as recently as 3 or 4 months ago, new highs in crude. Everybody is, oh, crude's getting back to 100, whatever. Guess what? It didn't. It went back to the 60s and 70s and chilled out. Crude oil back at those highs, Errol. It's like an old friend we're happy to see again, happy to trade again. But today I want to look at trading crude oil with the futures, but making them smaller. What say you? Have you dipped back into crude since I think one of the first shows you and I did together, we looked at trading crude. Have you looked at this in recent months?
I haven't, but it's actually funny you brought it up. Well, I have yesterday for the first time because I went on TikTok live and somebody actually mentioned it, said sell oil. And I was like, let me check and let me look up oil. And I saw, okay, oil is having a nice run right now. Maybe we can trade oil, but this was after hours. So we actually never put a position on, and I never actually came back to check out oil. So what's been going on and what's the talk about oil right now?
So it's interesting. It's interesting. And I always say this on the network here that like the interesting stuff about what is going on in crude oil and what the talk is, save that stuff for nights and weekends. Like that's cocktail party talk, as I like to say here. We aren't as intrigued in what's going on in crude oil as we are intrigued in the statistical basis for, like your friend on TikTok was saying, potentially selling crude oil. That statistical basis is founded in a lot of stats that I'm going to dump on you here. Crude oil spent just 5% of days above $80 since 2020. Now, Errol, there's been, and actually I want to see if you can get closer because I did this with Sosnoff earlier today. Since 2020 began, this decade here, 2020 until 2022, how many trading days have there been, do you think?
From when was the start date?
Jan 1, 2020. How many trading days have there been? How many crude oil trading days have there been in the market since Jan 1, 2020?
We are in 2022, 257.
Double it, dude. Double it.
500.
500. Yeah. See, what's actually beautiful is Errol is such a smart dude that you nailed it, but you forgot the easiest part, which is doubling that number. Because we've 2 years, dude. So I think what Errol's brain just did, which is great. Like if you were in an investment banking interview and they dropped a question like that on you, which they would, that's like a classic iBanking question, which is like, oh, if you're in Chicago and you need to get to Las Vegas by bike, how long will it take you? You just let your brain process that. And you did exactly that, which is like, okay, it's the start of 2022. We've had 2 years. There's about 252 trading days in every year. And so 257, but you needed to double it. There's been actually exactly no stuff, dude. 514 trading days. So you would have nailed it if you simply doubled that number, but still great brain, great thought processing by you. Of those 500, more than 500 trading days in crude oil, Errol, 28 of them have seen crude oil close above 80, which is to say super rare that we're up here. So, I mean, my mind always gravitates, and I'm interested to get your take. When I hear something like that, I'm getting short. I mean, what's your vibe? If something's 95% of its closes have been below this line, only 5% have been above it, it's above there now, I'm trying to get short, right?
Yeah, immediately. If I look at a set of data, that looks like an outlier move to me. And those outlier moves to me sounds like they might have a higher probability because it doesn't happen as often. So I would want to probably jump on this opportunity maybe.
Absolutely. And it's funny because that 5% number, I'm sitting there, I'm going, man, that 5% number, like that's a funny number that I think about a lot. Like, where else do I see it? Oh, we see it in these standard deviations that we've been talking about very often recently. A lot of people liking the standard deviation day trading content we've been cooking up. And it is that 2 standard deviation number where crude oil has existed between $80 and as low as, remember that huge sell-off in the early part of 2020. But the range in crude oil up to 2 standard deviations has been 20 all the way up to 80. And so we are right now outside of that 2 standard deviation move. And the reason I bring it up, Errol, is because it's the same principles as our short-term day trading when, we're looking at net changes and the standard deviation on a day trade in crude oil is $2, and then the 2 standard deviations is $4. I'm rounding here, and the market is outside of $4. We're like, oh, this is an outlier move. I'm looking to get on the other side of it. It's the same math, and all of these concepts also lend themselves to longer term price extremes. If you are not into day trading or you want to do both like me, you can also look at it this way. And I crunched the numbers. Average price in crude oil in those 500 plus days of trading, the last 2 plus years here, average price in crude is a little bit above $50 a barrel. The 1 standard deviation range, it's lived, as you can see there in those gray lines, between about $70 and $30, 1 standard deviation. And right now we're outside of that 95% area above 80.
Yeah. And I think this, especially for standard deviation and somebody that's not familiar with these things, I think throwing this on the chart with the price gives you just such a solid visual on showing you where we're outside of those moves, where that outlier kind of range is sitting at and where we're sitting at now. So.
And I want to pause here. We can have people further digest this graphic a little bit, and hopefully that standard deviation concept is starting to sink in with people more and more the more that we talk about it. But what's funny, Errol, is there's a lot of news around crude recently, and there's a lot of talk about inflation, all these different things. And it's no coincidence whatsoever that the market is at an outlier area, and that is coinciding with the all of this news of everybody saying, oh, crude's going up to $100 and everything else. How have you done recently? And this isn't to say one is better than the other. Of course, I think trading with statistics and looking at outliers and these different things using actual math and data, it works better for me. Mm-hmm. If you want to trade based off the news, good on you. But how have you been able to kind of get that new stuff out of your mind? Because even a statistical trader like myself, I look at selling crude and I look at all this data that tells me, yeah, selling it would be probably statistically a pretty sound strategy. You still, those ideas, those people online who are saying, oh, crude, it's going to run up to 100. It still seeps in a little bit. Have you been able to kind of shut that stuff out?
Oh, yeah. In terms of, executing based off of kind of what I'm getting from the data rather than feelings or emotion or what I'm getting from external sources. Yeah, 100%. And again, I just want to make sure I'm getting your question correctly. Let's say we think someone's online saying, we think crude oil is going to go to 100. It's going to 100, but my data is telling me sell. Am I going to sell although everything else is telling me bullish, and we can go higher from here? Yeah. Personally, I'm going to try and stick with my data. So those outlier moves, I'm going to stick with my data regardless of what my emotions tells me. And again, I think I might be a little opposite. When I hear that outside noise, it makes me feel to stick to the data even more now that I hear those outside voices saying all these kind of things. So that's kind of my take there.
That is, Errol is quick. You are so thick in the contrarian trading mindset at this point that, yeah, it's almost like you're harnessing, you're a young Jedi, and you're harnessing that dark energy and you're almost like turning it into your contrarian energy. It's making you even more convicted in what you're trying to get done. I only bring it up because this is something that is always going to happen.
That's a great point, though. That's a little nuance that some people stumble upon. Yeah.
Well, because whenever I always see this, and this isn't to say that I'm right 100% of the time. Of course, I take losers all the time, almost every single day. But as long as you're consistently following either a statistical approach or you're consistently following that news-based approach, that's all I'm saying is stay consistent, because every time there's an outlier move, and your stats are backing it up, like this is an outlier move, every time that this is flashed, there's been a good opportunity to do X, Y, and Z. Almost every time that happens, the rhetoric online and the rhetoric in the news is almost always going to be, oh, all hell is about to break loose, because we're in outlier territory, right? And
100%.
when we're in outlier territory, the financial media, of course, they're going to pick up that outlier and spit it out as sensational news of, oh, this is the new. It was the same with interest rates. Oh, this is the new normal, 0% rates for all of time. Rates are popping off now. And so like, I just like to bring that home, because whether you do follow some of the news stuff or you follow stats, that thing is always going to creep in when you see an outlier like this in crude. And of course, yeah, crude can continue on to 85, 90, $100, sure, but it hasn't been above 85. It hasn't closed above 85 in the last 2+ years. So I'm looking at a short strategy. I mean, you can't argue with statistics like this. And now the question becomes, and I get this actually a lot, which is like, well, how many data points should I be looking at? And to me, it's another question of like, well, just pick a number you like and be consistent with it. For me, and longer term price extremes, it's always like, well, what's been going on the last year, the last couple of years? And so we're looking for 2 years worth of data, and crude hasn't been above 85 in those last 2 years. So I'm looking at this saying, this is a nice extreme to get on the other side of crude. Of course, in years past, in the 2010s and in the aughts and what have you, crude oil has been higher than 85 for sure. But this is the landscape that we have right now. And these are the data points that I'm looking at. And we haven't been high. We're not at 85 yet, Errol, but we haven't been higher than it. And I want to kind of mix that with the strategy that gets our break evens higher than where we're at right now, and close to that 85 extreme that we haven't been. Have you looked at the covered put before?
I have not. I have not put on I've done covered calls. I've never done the covered put, actually.
I'm sure you can kind of intuit what a covered put is going to be, as the covered calls like evil twin, I guess.
Yeah. Like, so if I were to sell a put on my money.
Well, and you would take a short position in the underlying, right?
Yeah. And are you talking about if I'm selling stock and I'm buying the put?
So a covered put would be selling the stock and selling the put, in the same way that a covered call is, I'm long and I'm selling the call to kind of to increase my odds, to get me some premium, right? And so this would be the same concept, just in exact reverse, which would be, okay, I want to sell crude oil. It's near these highs, but I also want those odds to be even pushed in my favor even further, and get my trade even smaller here, which is the whole point. Because
so I have a short position on, actually. So I've never done a short put before, or a covered put. Then.
Hell yeah.
Yeah.
Hell yeah. Well, we're going to get it. We're going to get it done today. First, though, I want to speak a little bit to this idea of getting crude oil smaller. The futures that you have with CL, this range here is a $70,000 range. And which is to say, on any given day, crude oil usually in those CL futures, Errol, moves a couple $1,000. Now, we're already getting smaller by getting our short position in SMO, which is the small crude oil futures. And then we're going to cover our position with a short put spread in those CL futures options, getting even smaller, getting those odds of success even better than our 50-50 or whatever you want to call it of a short, pushing those odds closer to, 70%, 80% by covering it with the short put here. And now this will get our break even above those highs in crude for this decade here of 2020 until now. Do you want to I can jump to the platform here. Are you sound with this strategy right now?
Yeah. So are we trying to get a break even above that high, in a sense, like we're kind of playing off of that high right now?
Well, I like to think of it this way, of like, the market is very close to those highs, and to cover your short with a short put is like, it gives you a better probability of profit and all these different things. But I do always like the concept of like, and selling that put gets us short actually above those highs. And so I feel even better about my position, knowing that my theoretical break even is above the highs in crude.
Feel better?
Both. They're both true.
Okay. It kind of sounds like you just completely disregard those highs, or did I take that wrong?
No, we didn't disregard any highs.
Okay,
Yeah.
okay. I just know with like Tom could absolutely care less about the previous price action.
He goes back and forth all the time on what he cares about. I heard that man talk for 30 minutes on how brisket shouldn't be chopped or something. He's absolutely wild. But anyways, I do want to look at here. We're getting short the small crude oil contract in the February futures here, the G22. And we can actually, just so I can get this done and show all the people the next piece of this order, I'm going to walk this down and get filled. So we're short crude, Errol, and now we go into the futures that are 10 times the size of small crude oil futures and sell the put spread. And actually, you can do it for 1 penny better than I did this morning here. And I'm going to the 80 strike. I'm selling a 50-cent wide put spread. Why am I so tight on the put spread, Errol? Because this contract is 10 times bigger than SMO. And so if crude oil collapses, then I want to still make sure that I'm profitable on my short crude oil position, And so if crude oil falls a couple of bucks and I'm up a couple $100 in SMO, my defined risk and everything makes sure that I'm profitable in that trade. And so I would put on this put spread here, 80, 79.5, and that's making crude oil even smaller and getting short above those recent highs.
I like that. Learn something new almost every day or every week since I'm on here once every Thursday, I guess. So that was nice. Yeah. And that actually was kind of nice too, especially because this was a little bit of conversation I had yesterday on live with that individual talking about putting on a position in crude oil here too. So is that a position you would personally be interested in, or was this just another, like, you could also put this position on, or are you fond of that?
Short crude?
Yeah. Like, are you short? Did you get short crude?
100%. What this is,
well, I just mean like, well, you can get short 5 different ways. My question is like, how did you get short?
Well, I mean, so that is for a second there, I thought Errol was like trying to lift the curtain and be like, is Frank actually short crude? And it's like, there's no song and dance on this show, friend. We do stuff for real here. If I'm getting short, I'm getting short. But so a great question. See, what's interesting here is today crude oil is inside. It's basically unchanged. Yeah. And so day trading, Frank, would have no real interest in selling the outright contracts, like selling the small contract.
That's where that's where I'm confused. Like, what would I do and why?
And so the reason why I added that put spread is like that makes it a smaller trade, but a longer term trade. Okay. Now Frank is more interested in shorting crude oil here just because it's at a longer term extreme, but that's my strategy changes from day trade Frank to longer term trade Frank. And that's why you add the put spread, you increase the odds in your favor, you make it smaller because if crude oil gets up to 83 or 84 and then it comes back, I've created a longer term strategy for myself with those options. I can withstand that move. And so it's a longer term trade. And that's why we went to the covered put as opposed to just the outright short.
I like it.
So I'll get the tickets for Bonnaroo for us. Will you and me camping in the middle of Tennessee? Does that sound like fun?
I am down. That means I'm willing to go. If anybody.
What a jerk! Unbelievable that you did. Listen, figure out who Herbie Hancock is, and then you can come back to me with all of your patronizing comments and everything else. Anyways, Errol, totally joking, of course. Love to have you on every single week. You've been a great addition here to Small Stakes. We love your general intrigue for all of our strategies in the futures world, and we're glad to see you get deeper and deeper with everybody else online into futures, making trades smaller in that futures world and getting new ideas in crude oil and otherwise. Errol, we love you. Thanks for coming on here this week. Everybody else, I love you as well. Thanks for watching Small Stakes. Splash into Futures is coming up next. See you then. Peace.